Hello guys, welcome to this brief section. So in this section I'm just going to be showing something very brief about candle 3. That's what I'm going to be talking about. So we're going to be looking at candle 3 and why it feels. It's very simple. So why does candle 3 fails? What happens when candle 3 fails? So pay attention, right? You can just pay maximum attention. Journal if you have to journal, jot if you have to jot, tape read you have to tape read, record if you have to record, as the case may be, whatever suits you. There's a reason candle 3 fails, and we're going to unlock that reason in less than 10 minutes. I won't take much of your time. I'm going to make the video to be very brief and not lengthy. The first reason candle 3 fails is for direction, right? Direction. That was your bias. How do you generate your bias? If you have not gotten a clue about this, watch the first video. You're going to get an answer. I explained it there. I told you that to generate your bias, you need to pay attention to the highs and the lows, and how market is reacting from it. So hence comes the statement, the highs and the lows are always your guide. And it's very true. The highs and the low are your guide because they give you a blueprint, a footprint of where the market is likely going to head for next as what they're drawing liquidity, right? So if you have a daily candle like this, right? You have wicks like this, a daily candle. Then you have another candle that does something like this. It wicked out the high. What's the next thing to expect? This low as a potential drawing liquidity, right? So this is how you basically generate bias. Very simple, basic candlestick profiling, simple basic candlestick anatomy. So the high is raided, we expect the lows to do experience a raid also. Context matters, key levels are involved. If you don't understand these two, the previous video are going to do justice to it, right? So we expect now a rally or expansion until the low is raided. The range low has been raided. So in the context or in the situation where the range low is not raided, what is the cause? What happened? What went wrong, right? The high has been swept, the low has not been swept. I just explained it now. The reason is bias. You need to understand bias, right? So if you're a range trader, if you're a lower time frame range trader, you want to take a glimpse view of higher time frame, 2x from the time frame you are trading or 3x from the time frame you are trading, to be able to generate an accurate bias for your potential next external range liquidity or your drawing liquidity, right? If you're a higher time frame trader, you take 2x view again, so that you'll be able to generate a potential direction for where you're going to experience. In that context, this is what I'm talking about. So if you are trading the 4 hours CRTs, if you are trading the H4 CRTs, you want to be building bias from daily time frame. You want to be building your bias from daily candles. You want to profile the candle. In that context, this is what I simply mean. So let's say this is a daily candle and you experience something like this, right? So it's close here, which means lower price. Closure below the body. This is why the highs and the low are your guide. So closure below the body simply means lower price. So what do I want to do next? This is a daily time frame. So I now scale down, like I said, example, right? Don't quote me word for word. I'm using an example here. It depends on the time frame you are interacting with as a range trader. So what do I want to do? I want to now scale down to my 4 hours time frame, maybe preferably maybe 4 hours, 1 hour time frame, as the case may be, and trade my range until where this low has been taken out. Why? Because this low becomes my external range liquidity. It becomes my target, right? So I want to be trading the 4 hours range, smack into the high, all the way down until the low has been smacked. Do you understand? So I built bias from daily, went to 4 hours to trade the range until my liquidity is hit. It's as simple as that. This is how you generate bias. And this is how you scale down to lower time frame to trade it. So why does your CRT fail? Simple. Your bias is wrong. Your bias is what is wrong. If your bias is not clear, if you are not getting clarity on the daily time frame, peradventure you are trading what the H4 CRT, so if you are not getting clarity on the daily time frame, why not scale down to what the weekly to get what more clarity? Scale down to the weekly to get more clarity. Do you understand? It's as basic as that. Once bias has been built, the range becomes easy to trade with what a target in view. So in that sequence, this is what I mean now. You have a bullish structure right about here, and you have a drawing liquidity at this high, for example, and suddenly something like this forms. This is where we get wrecked. You see something, okay, excuse me, you see something like this formed, and you saw that the high has been swept. Then you suddenly mark this low ignoramulously. You mark this low as what, and expect an expansion to the low. Probably you're going to get the expansion, probably, right? But I need you to understand that this entirely is wrong. This is wrong, because this is the first paramount reason your CRT fails. This is the first paramount reason your candle 3 fails. You have a drawing liquidity and you are taking a counter trend CRTs. It's very risky. The best this range can do to you, which leads us to number 2, is deliver to you 50%. That's if it even does deliver 50% at all. Then boom, smacks against you to invalidate you. Call straight to your point. Right? So you want to be trading what? Your range in the direction of what? Your bias. Your range in the direction of what? Your bias. So when you see something like that, you don't want to do it. This becomes more ideal to trade. Something like this. This becomes what? Very much ideal to trade. Simple. In this context, your candle 3, your C3, will not fail. Yes, it will not fail. It will expand. It might take 3 candles further to expand, 1 candle further to expand, or a single unit candle to expand, as the case may be. Doesn't matter, as long as we know where the market is going to. How it get there is not my business, but I know it's going to get there. Do you understand? So it expand. Now let me give you an example, a live example right here. Let's head to the monthly GBPUSD. EURUSD also a very good example, but let's just check GBPUSD out, right? So right here you have what? You have a key level, first of all, which is your internal range liquidity. That's your fair value gap. It serves as a key level here. Once again, I repeat, if you don't understand key level, I think you need to go back to the previous videos and you get perspective of what I'm talking about. Now, market traded into your key level with this single candle and did what? Did a manipulation. This is it. In this context, the probability of what? Your CRT or your range failing, it reduces. It becomes low. And I'm going to explain that. Why does it reduces and why does it becomes low? Look at the general structure of the market, the overall view. We are buying, we are in a bull trend. Now, it's not enough to say, okay, we're in a bull trend. What else are you seeing? What obviously else are you seeing? These are targets, right? So what do I want to do? This monthly time frame. I want to now go to what? My tradable time frame, the time frame I can interact with to place trade and do what? Trade my range until target is met, right? Until the target has been what? Hit. It's as simple as that. So what do you see here? You have a CRT here, you trade it. You have a CRT here, you trade it. You have a CRT right here, you still trade it, right? Now the probability of you getting it wrong here, it reduces, it becomes minimum. Then probably you see something like this. you know, of which some people are going to actually gullibly fall into it. Right here, let me give you an example of what I'm talking about. This is a live example, so you're going to watch it play out. So you have this, they'll say, okay, this is your CRT high right here, and they are not wrong, and this is your CRT low, right? Do you expect the market to dwindle all the way down to this low? Are you a joker? It won't. The best it can do is to deliver to you 50%. That's the best it can do, and that's what I'm even anticipating. I expect market to do or deliver 50%, then we expand further to the high side, right? It's as simple as this. So you need to get your bias in check. Once your bias is gotten in check, you trade your ranges in the direction to the bias you have gotten until your drawing liquidity has been hit. Simple. Until your drawing liquidity has been hit. I really hope you find this very, very insightful. I hope this is very educating for you, because this happens to be a challenge. Now, how do I take advantage of it? My favorite. How do you take advantage of the failure of candle 3? Sorry, it's kind of messy, so let's step down to lower time frame. How do you take advantage of it? So you have candle 1 right here. These let's say we have a drawing liquidity at the high, right? Okay, don't worry, I'm gonna use this. Okay, yeah, pay attention. So this is your DOL, these are our targets, right? So we want to be trading candle 3 into our targets. So what happens if it fails? Then you have, let's say you have something, oh sorry, I don't know why this is so messy. So you have something like this, a singular unit candle with what its highs and its lows, right? You have something like this. This is what our DOL, this is where we want to target. And you have it wicked it out like this. Pay attention to what I'm doing. Then suddenly you have candle 3 forming, right? You have candle 3 that is about to form right here. This is your drawing liquidity, or let's maybe extend it a bit little higher. I think we should extend our drawing liquidity a bit little higher. Yes, let's extend it a bit little higher. So how do I now take advantage of it? This is what you do. It's simple. Now you expect the next candle. Remember, don't forget, the highs and the lows are your guide. So 50% is almost guaranteed, like I told you. So either you are getting your bias wrong or it has hit 50%. Now, how do you take advantage of the failure swing? When it opens and comes down, that's when to take advantage of it. The moment it opens and comes down to do what? Smack this low. That's when you take advantage of it. Now you oh my god, you just wrecked few people. You wrecked pattern traders right here, because pattern traders are expecting one thing. Dumb set of people. They're expecting candle 3 to do what? Expand. Why? Because they have no context of bias in view, nothing. They just pick CRTs out of the thin air, pick ranges out of the thin air, and just ride along with it. Now, but you that understand logic, you understand the logic of the formations of these things. And because the market needs to trap a lot of people to generate sufficient momentum to smack into your what? Your target, it needs to set you a trap. And that trap results to failures of what? Candle what? 3. So this is what candle 3 will oftenly come and do for you. Like this. So this is what ideally candle 3 does. It comes and does what? It taught to soups the low of what? Candle 2. Then expand all the way into the drawing liquidity. This is how you take advantage of the failure of what? Candle 3. Now, in essence, it's not actually failing, right? It's actually still a CRT. But you have dumb traders expecting what? A typical expansion to the opposing side, having no contextual view of what the higher time frame is actually talking about. Do you understand? So they are simply what, sitting down to expect what, an expansion to the downside of something like this, which they never will get. They never will get it. Never. So candle 3, we come and do what? Sweep its low of candle 2. Then you have what? More expansion to the high side. I really hope you enjoy this, and you can backtest it often all the time. You're going to see. I just gave you an example. This is exactly what's going to happen on GBPUSD. I gave you guys an example. This just, you're going to see it happen right here. If this candle, if we have a closure of this particular today's candle, that's this Monday's candle, you already seen its CRT is about to be formed. Now we're going to have a closure here. Then Tuesday is going to do what? Give us, Tuesday, Wednesday is going to give us low of the week before we have continuous expansion. Now you already have dumb traders waiting for this low to be hit. They are waiting for it. So this is what you expect. That's what they're expecting. For the market to come and take this low. Will it come? I don't know. Maybe, maybe not. But 50% is guaranteed. When it fails, it becomes like this. Sweep the low and continue. This is the low. It ought to sweep it and continue. I really hope you find this very, very educating, and see you next section. Bye. Please do well to like. Yeah, if you wish.